Hey everyone, it is Julie here with TipRanks, and today we're taking a look at two unanimous strong buy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two companies in the utility sector that have unanimous buy ratings from Wall Street. That includes some recent ratings from a 5-star analyst at Jefferies. Now they note that utility companies have been under pressure from high inflation these last couple of years, but the long-term trends are bullish. The demand for electricity is growing, powered in part by the AI boom and their dependence on power-hungry data centers. So we're taking a look at some recent picks from a top analyst in that industry and seeing what the rest of Wall Street says. Just before we get into today's stocks, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's take a look at the profile of the analyst that we're checking out. His name is Julien Dumoulin-Smith from Jefferies, currently ranked 669 out of over 9,000 Wall Street analysts. He currently has a success rate of 58% and covers the utility sector in both the US and Canadian markets. And the first stock that he recently rated a buy is Talen Energy. They trade under the ticker TLN, currently priced at $170 per share. They've seen some massive growth year to date, climbing 164%, and in the last 3 months have grown 45%. They do score a 10 out of 10 on the TipRanks Smart Score. Talen Energy is an independent power and infrastructure company and is one of the largest such companies in North America. They focus on delivering safe and reliable power generation with the most value per megawatt of energy produced. The company's power generation portfolio includes a full range of assets: nuclear, natural gas, oil, and coal. These power generation operations are anchored by the company's Susquehanna nuclear power plant, the 6th largest plant operating in the U.S. It's capable of delivering clean and reliable power 24 hours per day, 7 days per week, and has led the way for the company to become a leader in providing energy for data centers. They describe this niche as a unique opportunity for growth. Talen did report a big earnings beat for their second quarter on August 13th and also increased their future guidance. They reported earnings per share of $7.60, well ahead of analyst expectations, and revenue of $489 million grew over 62% year over year. The company raised their 2024 guidance ranges for adjusted EBITDA between $720 to $780 million. Hearing from our 5-star analyst at Jefferies, he said the company's PJM-based generation-only portfolio is well-positioned to benefit from a variety of power trends, including the rising electricity demand, notably from data centers, and the growing value of firm capacity. These trends translate into multiple sources of potential upside that could drive both increased profitability and multiple expansion. Beyond that, TLN has high visibility on substantial earnings growth in the next few years, driven by the dramatic increase in capacity prices. Talen Energy has 5 current analyst ratings, and all of them give the stock a buy. Analysts' average price target comes in at $195.80, implying an upside potential of 15.8% from current prices. Looking at those ratings down below, on the low end we do have a buy from Oppenheimer, has a downside of 17% as we already surpassed that price target, and our high-end price target does come from our analyst at Jefferies at $232, implying an upside of nearly 37%. For our second strong buy utility stock, we're taking a look at Vistra Energy. This is one that we have covered before, most recently back at the start of summer. They trade under the ticker BST, currently priced just above $90 per share. Year to date, their stock has climbed 137%, and over the last 3 months is up 3.8%. They do score an 8 out of 10 on the TipRanks Smart Score, with hedge funds increasing their holdings by nearly 11 million shares last quarter. Vistra Energy is a Texas-based power company that generates electricity at utility scale. They are the largest competitive power generation company working in the U.S. and can produce approximately 41,000 megawatts of electricity, enough to power 20 million homes. They operate in all of the nation's major competitive wholesale markets and have a reputation for focusing on reliability, affordability, and sustainability. Their power generation portfolio features natural gas, coal, nuclear, and solar facilities, and even includes battery facilities for energy storage. They are expanding their zero-carbon generation footprint and operate the nation's second largest fleet of competitive nuclear power plants. Vistra did share Q2 earnings results back on August 8th, and while their results did fall short of expectations, the company did reaffirm their full-year guidance. They reported Q2 earnings per share of $1.28. This did grow over 10% year over year, but fell 10 cents short of analyst expectations. Revenue came in at $3.85 billion, which missed by $110 million, but did grow over 20% year over year. They did complete 2 long-term renewable power purchase agreements with Microsoft and Amazon and reaffirmed their midpoint guidance for ongoing operations adjusted EBITDA. Our Jefferies analyst recently called the stock his top pick in the power sector. He said that as one of the largest and most diversified IPPs, VST is well geared to the upside on multiple fronts, including the general increase in power and capacity prices, higher plant utilization, as well as potential above-market contracts with data centers. As we project outsized growth over the forecast period, we still see value in the stock, which continues to trade at a discount to peers. With 6 current analyst ratings, the Vistra Energy stock comes in as a unanimous strong buy. And the average price target comes in at $108, implying an upside potential of about 19% from current prices. Looking at our ratings down below, we have our Jefferies analyst here at $99, and while he said the stock is one of his top picks, he's actually our low-end price target with an upside just shy of 9%. Our high-end price target comes from BMO at $120 for an upside of nearly 32%. So that is a quick look at 2 unanimous strong buy stocks in the utility sector. Let me know your thoughts on these companies in the comments down below and what other stocks in this niche have caught your eye lately. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So please make sure you always stick to your own investment plan and do your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.